It's Kyle Hunter, aka the Hunter of Dividends here. We're going to talk about another dividend stock here today. I hope everybody's having a great week. Hope you've been building up your dividend investment portfolio here of late. Let's talk about Extra Space Storage, a REIT that is pretty exciting name. I think this is one that is kind of a boring business that's fantastic. This does well in any kind of recession, the economy doing well. This one still holds up. The self-storage business is a really good one. People are going to keep their stuff. The economic environment doesn't matter as much to one like this as most. But let's take an in-depth look here at Extra Space Storage. As always, I'll try to be quick. I know your time is valuable, but let's look first here. I'm going to bring this Extra Space Storage chart for 1 year. See, this one's been on a pretty steady decline here since August. We were up as high as about 215, 216, down to 145. See, the 6-month chart here has been pretty choppy. 1 month, it's down quite a bit. If you go out to the 5 years, then you see that this one has still done fairly well over that period of time. It did get as low as 88 or so around the start of COVID in 2020. So let's look at Extra Space Storage from a Simply Safe dividend standpoint. Now, I always say that I highly recommend Simply Safe Dividends. I think it's a fantastic tool for dividend investors that are really serious about trying to make passive income work for them. So Extra Space Storage, self-storage REIT, 4.46% dividend yield right now. Most recent dividend growth was 8%, which is very solid. Beta 0.93. Most of these self-storage REITs are going to have a lower beta than average. So keep that in mind. This one's headquartered in Salt Lake City. 66 is the dividend safety score that Simply Safe Dividends has given this one as well. If we look at some of the details about this one, it does have super interesting. A recession last time in 2007 to 2009, it was down 66%. Would have been a fantastic time to buy EXR there when that was. The recession sales were only down less than 1%. You see this across the industry in self-storage, the recession sales stay very strong regardless of the economic environment. So keep an eye on that the next time we go into that recession, whenever it may be, that it could be a good buying point for some of these. Right now, timeliness, they say dividend yield 33% above its 5-year average. Lower forward P to AFFO, which price to earnings doesn't really mean anything here. So you want to look at this AFFO ratio. These are both looking good for the timeliness that it could be a bit undervalued. The 52-week range, you see it is lower, almost at its 52-week low at this point. There are the payout ratios. The free cash flow here in the last 12 months was 68%. You see that it's been pretty good here from operating margins and return on equity. You do see really good margins in this business. And as far as debt, above 2 is their preference for REITs. It's up at 4.92 here recently, 4.32 most in this year, 2023. So EXR looks pretty solid financially. It is yielding 4.46%. The 5-year CAGR, which I don't believe I showed here, was 14%. Very solid. A nice number there for EXR. Now let's transfer over to fast graphs and look at some of the graphs here briefly on this REIT and see if it looks like a good value at this point or not. So we check out Extra Space Storage here on fast graphs. This is a spot where I do think Extra Space, if you look at the normal multiple, we're looking right now at adjusted operating earnings. And based on that, we see the price correlated with adjusted operating earnings. The typical multiple given to it, this would give you 16.5% ROR, rate of return, through 2025. If you just want to look at operating cash flow, which I think is pretty good to look at too, it's again 16.24%. And then if you look at free cash flow to equity, 16% again. I don't think anybody would be upset about 16% annual returns from any investment. This is one where I would highly recommend, if you do invest in extra space storage, to consider doing so in your Roth IRA. There's REITs, and a Roth IRA is kind of a great way to save money long term tax wise. Roth IRAs are fantastic, and those REITs that are taxed at ordinary income instead of getting the high ordinary income tax in the IRA, it's protected. So I think that's a good way to look at it. As far as my take on EXR, obviously, I want to say that I'm not an investment advisor, and everybody should do their due diligence. You have your own situations. I do think the self-storage business in general is a really good business. I like it a lot. I own CubeSmart. I do not own extra space storage yet, but I do plan to buy this one very soon. So depending on when you watch this video, I might already own this one as well. I want to up my stake here in the self-storage business while it's a bit out of favor, because I think this is a very good one long term. So EXR, thumbs up for me. I think it's a good long-term investment. What it will do in the short term, we don't know, but I think long term, this will be a good one. Again, this is the Hunter of Dividends here on the Hunter of Dividends YouTube channel. Follow me at Hunt Dividends on Twitter. You can always request, whether it be in the comments below or whether it be on Twitter or wherever it may be that you can get a hold of me. Reach out to me and request a stock that I could analyze here on here. I love doing this. I've interacted with quite a few of you, especially on Twitter. Appreciate that very much. Give this video a thumbs up if it's helped you at all. Subscribe to the channel. It always helps a lot. Everybody, let's keep building up these dividend portfolios one brick at a time. It's a slow process, but it pays off in the long run. Have a great week, everybody.